$250 billion for an AI startup that barely existed a year ago.
Oh, please. It's just Elon moving money from his left pocket to his right pocket.
You're so cynical. Putting XAI inside SpaceX is a strategic masterstroke. You need serious compute to reach Mars.
You need a valuation bailout, Nate. I'll take a deal that actually makes financial sense, like the $2 billion cake buyout.
Wait, KKR buying Nothing Bundt Cakes?
I'll show you why frosting is a better asset class than rockets. The rundown:
$14.2 billion just to buy back your own factory.
half your own factory. Intel's buying back the 49% stake in their Ireland fab venture. It's a massive flex, but honestly, looking at their free cash flow right now, it makes my eye twitch.
You have to own the means of production, Maya, especially when the chip wars are heating up.
I know. Speaking of owning the means of production, Gallo just closed on Four Roses Bourbon. Kirin Holdings finally let it go.
Good for Gallo. The wine guys are realizing you can only sell so much rosé before you need a product that actually burns on the way down.
It's a smart diversification play, though I desperately want to see the multiples they paid. Kirin doesn't usually sell cheap.
Speaking of not cheap, Goldman Sachs officially closed on Innovator Capital Management today.
The defined outcome ETF pioneer, Goldman's just gobbling up fee-generating assets right now. It's incredibly boring and incredibly lucrative. Classic Goldman.
Very that. Okay, but we have to talk about the cake deal.
Oh my god, the cake deal.
KKR is scooping up Nothing Bundt Cakes from Roark Capital for $2 billion. $2 billion for frosting.
It's not just frosting, Nate. It's high-margin frosting. But seriously, $2 billion? I read the release, and KKR's taking on a serious chunk of debt here to make the math work.
The rumor mill is going crazy on this one. The whisper is that Roark exiting means a massive portfolio reshuffle is coming. They own practically every sandwich shop on Earth.
I get Roark selling, but KKR paying $2 billion for a strip mall bakery concept? I don't buy the valuation. There's no way the unit economics justify a $2 billion price tag for Bundt Cakes.
You're wildly underestimating the suburban birthday party market. It's an absolute cash machine. People love those little cakes.
It's a sugar crash waiting to happen. The debt load alone is going to eat all their free cash flow the second consumer spending dips.
Spoken like someone who's never stress-eaten a red velvet buntlet while reviewing a pitch deck. Look, high-growth food and beverage is still catnip for private equity.
I prefer my stress eating in the form of pharmaceutical M&A. By the way, keep an eye on Gilead tomorrow. They just pushed back the expiration on their Arcellx tender offer.
Regulatory headaches?
Or shareholder holdouts. Either way, the timeline's slipping. Also, keep your radar up for Estee Lauder. Gossip is they're advancing talks with Puig for a massive stock-based tie-up.
A beauty mega merger. Love that. But right now, we need to talk about Elon.
$250 billion of Elon, to be exact.
SpaceX buying XAI. The lawyers at Sullivan and Cromwell are calling it historic. I'm calling it the wildest related party transaction I've ever seen. The big one. $250 billion. I just need to say it out loud again to make it feel real.
I literally had to count the zeros in the Sullivan and Cromwell press release 3 times. I thought it was a typo.
Not a typo. SpaceX is officially buying XAI for $250 billion.
Explain to me, slowly, how a rocket company justifies paying that much for a generative AI startup owned by its own CEO.
You're looking at this like a traditional M&A deal. This isn't traditional. This is Elon reorganizing his brain into a single corporate entity.
Oh, please don't give me the visionary founder defense. Let's look at the actual governance here. Elon Musk is sitting on both sides of a $250 billion trade. If I were a minority shareholder in SpaceX, I'd be screaming.
Would you? Because he's building an ecosystem. Look at the synergies. SpaceX generates ridiculous amounts of telemetry data. XAI needs data to train its models. Then XAI builds better navigation, better logistics for Starlink, and optimizes rocket trajectories. It's a perfect closed loop.
You can build an ecosystem with an API key and a strategic partnership. You don't need to transfer $250 billion of equity value. Who even did the fairness opinion on this? The math is completely detached from reality.
The legal advisors at Sullivan and Cromwell are out here calling it a truly historic acquisition for the tech sector.
I'm sure they're calling it historic. Their fee on a $250 billion deal is probably enough to buy a small island nation. Of course they love it.
Spoken like a true journalist who hates seeing advisors get paid. Look, I get the governance nightmare, I really do. But think about the combined private market cap now. SpaceX was already pushing $200 billion. You mash these together, you have a $500 billion private behemoth.
Which makes it basically unregulatable. And honestly, that's probably the actual thesis here.
Wait, what do you mean?
If you keep XAI as a standalone software company, the FTC can scrutinize it, they can regulate it. But if you bury XAI deep inside a defense contractor that NASA and the Pentagon absolutely rely on to get satellites into orbit, suddenly the government has a much harder time messing with your AI development.
That's actually brilliant. See, you're coming around to the strategy.
I'm agreeing that it's a brilliant regulatory shield. I am definitely not agreeing on the price tag. I want to see the footnotes on this term sheet. There's no way this is a cash deal.
It has to be almost entirely SpaceX equity. There is no way they're floating that much cash, even with all the Starlink revenue coming in.
Exactly. It's monopoly money. He's just trading his greenhouses for a red hotel on Boardwalk.
But the Red Hotel launches rockets to Mars. You have to admit, it's the most ambitious corporate consolidation we've ever covered.
It's the most expensive internal transfer of assets we've ever covered. I'll remain a skeptic until I see the actual shareholder disclosures. But speaking of ridiculously expensive assets that people consume internally, I hear private equity is getting back into the frosting game.
Oh, we absolutely need to talk about KKR. Because dropping $2 billion on Bundt Cakes is certainly a choice. Voices. Sullivan and Cromwell put out a memo calling the SpaceX and XAI tie-up a truly historic acquisition for the tech sector.
Historic is certainly one word for it. I would go with circular. Or maybe just incredibly convenient.
Oh, come on. It is $250 billion. You have to admit, bringing that level of compute under the aerospace umbrella is a massive play.
It is Elon buying Elon. He is moving $250 billion from his left pocket to his right pocket and paying lawyers a premium to make it look like a standard M&A deal.
The governance is definitely a nightmare. My inner banker is sweating just thinking about the fairness opinion. But marrying artificial intelligence with a global satellite network, it is the ultimate vertical integration.
I need to see the actual cash versus stock breakdown before I hand out visionary medals. Right now, it just looks like a capitalization trick disguised as a moonshot.
You are completely immune to romance? Fine, let's look at a traditional buyout. Commentators are saying KKR taking over Nothing Bundt Cakes shows massive private equity appetite for high-growth food.
KKR is paying $2 billion for cake.
Really good cake. Have you had the lemon raspberry?
I care way more about the seller here. Roark Capital is cashing out. The rumor mill is buzzing that this exit signals a broader portfolio reshuffle for them.
Roark loves their franchises. If they are dumping the cake business, they might be clearing the decks for something else entirely. I am hearing heavy whispers that Estee Lauder and Puig are advancing talks for a massive stock-based tie-up. So everyone is looking at their portfolios right now.
Or Roark just saw a $2 billion valuation for a bakery and took the money and ran. I will believe that beauty deal when I see the actual term sheet.
Fair point. Speaking of deals that need a little more time to bake, we should probably talk about what is happening over at Gilead. Spill the tea. $2 billion for Bundt Cakes. I just need to say that out loud so we both process it.
$2 billion. And KKR is the one writing the check. I read that Sullivan and Cromwell are calling the SpaceX deal historic, but honestly, KKR buying Nothing Bundt Cakes from Roark Capital is the kind of aggressive private equity move that actually surprises me.
Roark is cashing out, and the rumor mill is screaming that this is just step one in a massive portfolio reshuffle for them. They're cleaning house.
Or they just looked at a $2 billion valuation for a retail bakery chain and said, take the money and run.
Oh, come on. You're underestimating the brand equity. Market watchers are drooling over this. KKR is taking over the debt, sure. but high-growth food and beverage is basically recession-proof. People need their sugar.
I'm looking at the unit economics, Nate. $2 billion is a massive premium. But fine, let KKR have their cake. I'm way more interested in the whispers coming out of the beauty sector.
Estée Lauder and Puig?
Yes, a predominantly stock-based tie-up. If Estée Lauder actually pulls this off, it's a masterclass in using your equity to force consolidation.
Wait, really? You think Estée's paper is that attractive right now? Puig just went public. Why would they take Estée stock instead of holding out for cash?
Because the founding family gets a massive tax-deferred rollover and a seat at the table of a global giant. It's textbook wealth preservation. You of all people should appreciate a clever paper trade.
Spoken like a true banker. You wound me, Maya. But speaking of things getting dragged out, we need to talk about what Gilead is doing tomorrow.
Right. They just pushed the expiration date on the SpaceX's tender offer. If you're holding those shares, you might want to pay attention. Tomorrow's radar. I'm watching the SEC portal tomorrow for Gilead. They just pushed the expiration date on the SpaceX's tender offer again. Somebody is dragging their feet.
Oh, come on. That's just standard regulatory sludge. You're reading way too much into a routine extension.
Routine? You don't extend a tender offer unless the shareholder math is failing or regulators are asking very annoying questions.
Fair enough. But if you want real drama tomorrow, check the beauty sector. The whispers about Estée Lauder and Puig are getting incredibly loud. And word is it's almost entirely a stock tie-up.
A stock deal? Good luck selling that to the Puig family after they just did an IPO this year. They want cash, Nate.
Hey, maybe they want the upside. We'll see if the term sheets leak. We also have RTB Digital officially hitting the NASDAQ tomorrow morning after the RV merger finally closed.
I'll believe that ticker is live when I actually see it trading. Catch you guys on the next one.